All right. We're recording. We've got some people here. Well, thank you everybody for joining us today. I'm honored to be joined by Kirsten Selby. Kirsten's one of our senior trade consultants and has been with GHY for 7 years, but 37 years in customs brokerage. Kirsten's one of the smartest people I know at GHY, and I've been fortunate to just be invited and part of this. We joked around when we were prepping with Rhonda, who joined me last time, that she got a few things wrong in the customs notice, so we booted her. But no, I'm kidding. Rhonda's in the sun having some fun, and I'm really the lucky one to be here and to be joined by Kirsten to lead you through the second versioning of Canada's 25% steel derivative surtax and really what has happened since we've seen more information come forward. But I'm Mac, the Director of Market Development. I'm in my 10th year with GHY, and very much looking forward to walking through with everybody and getting to hopefully another very interactive question and answer period. Last time we had a lot of questions come in through the chat in conjunction with the Q&A. If you could, please use the Q&A tab feature. It's much easier for us to navigate that way. I think I was a little reckless last time in trying to get to everyone. We will do our best to get through all the questions and answers, but if you could please keep them contained in that place, it would be extremely helpful. Afterwards, we will follow up by email with everybody. We'll give you a copy of the deck, a link to the YouTube recording, so you can watch this over and over again and be an expert yourself. Any questions, just drop in the chat and we'll get to them as we go. Or sorry, the question and answer, and we'll get to them as we go. That being said, on December 19th, we hosted our first webinar around the Canadian surtax, the steel surtax, that is. And that session really laid the groundwork for, I guess, what's coming to be and shaping up to be a significant trade action. We have gotten a little bit more information since then, and today we're going to move through the conversation of really what the customs notice looks like, a quick recap of what CBSA has formally communicated. We're going to dig into the backgrounder and explain why this document carries a little more weight than the notice itself, which is a little unusual, but it's definitely worth noting. We're going to talk about some of the implementation confusion where the language can get murky, some notes around valuation and costing through that Kirsten will lead us through. We will point out a couple of gaps and opportunities, some inconsistencies or maybe things that will be seen as odd that we're catching in the rollout. We'll identify some importer risks and scenarios. What's at stake if you don't act and just leave things alone. And then finally, what can you do? Like where do the practical steps live to protect your business and make the most of the opportunities that may exist? We hope you leave today with clarity on what's happening, what's missing, what you need to do to make the most of this for you and your business. But as always, please reach out to us with any questions. We're happy to jump on a complimentary 15-minute call and walk you through your specific scenario because it is unique to each individual company and their supply chain. So we have to look back. We always have to look back to know where we're going. And if you were with us in late December, you will know really how we got here with the history of Canada's safeguards, steel safeguards, that is, dating all the way back to 2018, how this is really to counter global overcapacity and trade diversion. The policy objectives are, they're clear. It's to protect domestic steel producers, align with allies, and address the downstream circumvention via derivative products. The global overcapacity issue is the one, signal we can point to as how we got here. And we can see the growth in, steel production, doubling since 2020 and driving to a place that, doesn't make sense. So if we look at this key timeline of events, maybe fast forwarding to more relevant times, we can see on November 26th, Prime Minister Carney announces new protections. Fast forward to the 24th to Christmas Eve, we can see the customs notice drop. December 26th, Boxing Day, we have the implementation. And then if we look into the future at a key date, we have some certain exclusions expiring around auto and aircraft and et cetera on July 1st. Um, the logic and the policy logic behind everything is really when direct steel imports are restricted, trade goes downstream into products. Think wires, fasteners, structures. The derivative tariff is designed to prevent that, steel showing up in a different box, the substitution to get around it. And we must remember that when we're applying this to our, own supply chains and what it matters to our companies. Why does it matter? It's a hard reset around how import permits and quota monitoring, how critical they become, and how we look at our supply chains from fundamental trade standpoints around tariff classification, valuation, and origin, the big three. So we'll dig into it, but setting that context on how we got here and what's happened to date, I think is of utmost importance to understand where we're going. So we see December 24th, the Customs Notice 2533 drop. This notice is purely administrative. It's not policy. It doesn't change the surtax or soften it. It really explains how CBSA expects the surtax to be applied and reported. It confirmed two key things for us, and I think you heard Rhonda and I lean into that quite a bit around importer responsibility and valuation methodology. So importer responsibility is simple as you, not your supplier, not your broker, you, importer of record, are accountable for compliance. That's pretty, standard across any importation, IOR responsibility, but it's key to highlight. And then the second is the valuation methodology. It's how to calculate this surtax based on the value for duty. They give some practical applications. I think there is some nuance in how the math was created, and we had some internal conversations on, hey, how this could be looked at from different ways, but it is, how to calculate surtax based on your value for duty. So what was already published in conjunction with this, which was a little bit unique and different, was the list of subject goods released on December 11th as the starting point to determine where you are. So I guess the bottom line of where this customs notice lands is it tells you how to comply, not whether you owe the surtax. So if your goods are on the list from the backgrounder and don't fall under an exemption, the surtax applies, and this is how to do it administratively. So what's new from the customs backgrounder now that we have the context of the customs notice is the backgrounder is telling us what goods are hit. What goods are hit by the surtax is essentially the list of subject goods. And if your product's on that list under the tariff codes listed, you're in scope of the surtax. So this matters because there's a very important paragraph in the backgrounder, and it's the only time that we see this through any official notices yet, is the remission application. We can see that under bullet 3 is a screenshot from the page that's essentially, showing, hey, this is the request for remission path. This is new, and normally remission details are showing up in the customs notice, but here they're in the backgrounder. So that signals that CBSA is giving an importers a path to request relief, but only under specific conditions. So I guess first we've got to check if you're on the list. If you find your goods on the list, confirm, are you eligible for any exemptions, and then next, am I classified correctly? And finally, into the remission application, does this apply in your situation? We're going to get more into the remission process into the future and give you a key takeaway as a thank you for joining us today on how to, but I think that's a highlight to look at in the customs backgrounder. So just looking at the legislative authority and painting the picture to get to the real meat of the conversation with Kirsten, but the surtax isn't just a CBSA rule, it's imposed through an order in council under the Customs Tariff Act. So this makes it law, not just guidance, and it's separate from your normal customs duties, your GST or other taxes. Because it's legislated, it's CBSA has no discretion on this. It's if your goods are in scope, the surtax applies, and that's the end of it. The authority sits within the Department of Finance, not CBSA. So CBSA's role is solely on enforcement and administration, not making decisions on what applies or what doesn't apply. So this is government level decision baked into law. There's no workaround except for the exemptions or the remissions. And I think it's very important to highlight who and how you escalate and look at this from a policy lens. We want to go back and just clarify this critical piece of information around how the Canadian surtax and really the word derivative different than the differences between how Canada and the US have used the word derivative. We're looking at in Canada where if your product is on the list, you're calculating against the whole value for duty. You're not stripping out the value of the steel components in your product like in the United States. In Canada, under Canadian legislation, the surtax applies to the full value for duty of the imported good. So if you take nothing else away from this webinar today, you must remember that when costing out what is the impact for me if my goods are on the list. We have to apply the whole entire value for duty, not just the steel content. It's a very key piece and a clarifying piece that we do get a lot of questions on and have addressed over and over again. So I just wanted to keep that at everybody's front of mind. We go into the background and we look at the actual list, and this has probably created the most chatter across industry groups or associations is the HS code 392520 being in articles of plastic. Think plastic windows and doors, 0% steel. Maybe there, in some cases, there could be a steel crank or something in there, but there are use cases where, the outcome is 100% plastic, 0% steel. And it's a bit of a head scratcher, and why something with no steel could be caught in the steel derivative surtax net is the question that everybody's answering. But I think what it highlights is it shows how broad and sometimes blunt the measures could be to address certain pieces of risk, or where the downstream steel in a different box theory could apply, and how customs and the Department of Finance rather has taken a look at this to say, hey, this is where we are drawing the line. So what can you do in this instance, and what's happening through different groups, associations, industry associations, is advocacy and raising the question to make your voice heard and work through your associations. And we're seeing a variety of customs driven associations raise this point, as well as industry specific associations lobbying on the behalf of their members, saying, hey, we need our voice heard, and push for clarity and relief on at least getting the answer on why. So I think there's more to come on this specific piece, but it is a highlight to know. And it's not something, like when I first saw it, I thought, well, this doesn't make sense to me. It's not something that was an oversight, but we are probably going to get more information on. Even if it was an oversight, I don't think there'd be an admission to that, but it clearly wasn't. There was some thought and process and research gone into this. So there are reasons, but you can work with associations, peers, partners to understand, okay, what can we do about this? I think it's worth highlighting at one more time the exemptions and where they exist, in both at the categorical level and then time bound, just to make sure you have the most out of what is available to you. So goods in transit before the surtax came into force are exempt. Steel derivative goods that are already covered by other surtax orders. So think the China surtax order from 2024, the US steel and aluminum in 2025, among others. You're not double taxed on these. They don't stack in the same way that in the US they do. Chapter 98 goods, so the special tariff provisions, they're excluded. There's exclusions on a time-bound basis for motor vehicle and aerospace end uses. And then there's an energy project on the Ontario-Manitoba border where, certain tariffs and wind and energy projects are also exempt. The date of goods, in transit to Canada of December 26th is another fading date in our rearview mirror that we can look back on as well. I think it is important to maybe highlight the casual goods exemption as another point of contention across industry. Hearing from a variety of partners through, clients, associations, and just network and peers saying, hey, this is strange that an individual can cross the border, make a purchase, and bring it back and not pay the surtax versus commercial. This will hurt Canadian business. So how do we stop 80% of the population of Canada living within 2 hours of the US border, driving over and bringing back. Well, it is right now a bit of a gap and a point of contention across many to say, hey, this is going to hurt our business. So, how do we protect against that? So might be worth raising your hand and making some efforts there as well. With that, I will allow Kirsten, pass it over to you to say, hey, like, let's take us into some more detail because Mac's boring me to death and I know all of this already.
I would never say that. I'm really hoping that what I present is as clear as what you've done so far, because yeah, I'm not as good at this as I am other things. So importer risks with steel surtax. This is more, I guess, my wheelhouse. Based on what we're seeing across different clients, there are 5 primary risks: classification errors, valuation mistakes, system failures, which lead to retroactive exposure. See? Classification errors usually tend to be the first place where there's some sort of issue. And it's not necessarily just because you may be paying surtax when you don't have to, but you might not be paying surtax when you should. And that can also create many issues, because 1 year, 2 years, 3 years down the road, CBSA can come back and take a look at it and say, hey, wait a minute, you should have paid surtax on that. We're going to charge you now. And 2, 3 years down the road does not give you enough time costing wise to make up any of that extra money that you have to pay. Misclassification can also lead to different valuation mistakes. Valuation, this is where I wish Rhonda was here, because she's far more eloquent with valuation. But you have to remember that there are different things that need to be added to the value of the goods. There are different things that can be deducted from the value of the goods. And if goods are misvalued based on the classification, again, CBSA will do a review and that will bring it up, whether you should be paying or whether you shouldn't have been paying. Valuation, and it's based on the value for duty. We'll get into that. It's based on the value for duty of the goods, which is the transaction value, which is the price paid or payable. So that paid or payable can include royalties, assists. You can deduct prepaid freight if it's already included in it. You need to understand what your values are and what the best costing is. System failures, if you manage this type of information in your system, if you don't have it flagged properly, you could be costing out goods to clients, and it should actually include the surtax. And then retroactive exposure, CBSA reassesses all the time. They've come out publicly and said that they are going to enhance their enforcement going forward, which means they're going to be reviewing and studying, reviewing and verifying more information now than they used to. And I guarantee this will be one of the things that they look into. Next slide, please. So why is this so costly? The steel surtax, 25% is a lot. For high value manufactured items, the surtax can dwarf normal customs duties. Even products with minimal steel content can attract very large surtax amounts, simply because the full value of the good is captured. Again, as Mac said, we're not taking just the steel part, it's the value of the entire item. So like $500,000 industrial equipment can incur $125,000 in surtax, regardless of the steel content. So you need to make sure that that item is classified correctly, either so you can cost for it now, or know that you don't have to pay it and not be worried that it's going to come back on you in 2 years. The 25%, sometimes that will take up your entire profit margin, in which case, are those goods still worth selling? Is it still cost effective for you to be importing them and selling them here, or should you just take them off the list? Should you just stop bringing them in? Being proactive is much better than being reactive, especially when it comes to CBSA. Sorry, Mac, I'm throwing you off.
That was misclick, sorry.
It's okay. You can go to the next one.
Perfect.
So post accounting. This is, I call this the scary slide because it's very true. Okay, you misclicked again.
Yeah, I'm done.
There we go.
I apologize. I'm sorry.
That's okay. I call this a scary slide because it just goes to show that these things can happen and do happen. When you're importing the goods at the time of release, there's a very good chance if you don't pay surtax, you're not going to get caught. CBSA, the officers on the front line don't look at those kinds of things. It's strictly trade officers. And trade officers will look at things later. And that later could be 90 days, a year, 2 years, 3 years, at the most 4. But they still can look at it 4 years later. So if they do an audit on you in 2 years and find that you should have paid surtax because your goods were classified incorrectly and you should have paid it, then you have to pay the surtax as well as any interest. And if the goods are what they, under reason to believe, what they call it's plain and evident that they're classified incorrectly, you'll get penalized as well. So on our example here, original surtax underpayment was $500,000. The interest is $120,000. So you're paying $620,000 3 years after you imported the goods and after you've sold them, and there's no way for you to recoup that. Again, tariff classification for these is so important. It's critical that you have those goods classified properly. Okay, next slide. So this is understanding how the duty and other surtaxes are assessed. So your first, the small block, is your base value. That's your transaction value or price paid or payable with any adjustments, anything added or deducted. And that is your value for duty in Canadian funds. Surtax and other duties are never charged on other currencies. It's always translated into Canadian funds before any of these calculations are made. If your goods are dutiable, the first percentage that gets charged on there is customs duty. If they aren't, then you can bypass the next level and it goes to CIMA or anti-dump duties. If your goods are subject to anti-dump, those also get assessed. If they aren't, then you can skip that and go straight to steel surtax. Now, if your goods are subject to one of the other surtaxes, then you don't have to worry about the steel derivative because Canada does not stack their surtaxes. However, they do stack duty, CIMA, and then any surtaxes. And then GST is payable on everything. So once you've added your customs duty, your anti-dump duties, your steel surtax, then you pay GST on all of those as well as the base value. So in our example, we've got a value for duty of $50,000. There's customs duty $3,500, anti-dump duty of $39,000, steel surtax of $12,500. Subtotal for GST is $105,000. GST is $5,200. So that leaves your total duty, anti-dump, surtax, and GST payable of $60,250 on a $50,000 shipment. That's where you really need to look and see whether it's cost effective to bring these goods in or not. Okay, next slide, please. Okay, CBSA always looks for consistency. So if you are bringing in the same goods, just various sizes, colors, brands, they expect that those goods will be classified the same. And I always say with CBSA, you can either be always right or always wrong, but don't go right, wrong, right, wrong, right, wrong, because that causes a flag. That's something that CBSA will look at and say, yeah, we're going to review you for sure. Either always be wrong or always be right, especially to avoid penalties. We prefer that everyone is always right, but we know that that can't always happen. Sometimes you get misinformation and it just doesn't work. This is the verification page, verification priorities for CBSA that came out in January. These are the items that they are going to be looking at and requesting audits and verification letters on. There's two types. There's verification letters and there's verification audits. A verification audit is they request the documentation from you and they review it and then come back to you with their decision. Verification letter is them saying, this is wrong, unless you can prove otherwise. So those ones are a little harder to do because you don't always have the information easily accessible, necessarily within the timeline that you're given to provide it. And sometimes that information is something that you've been doing for the last 15 years. And it's hard to go back 15 years and find that information that you need. So right now we've got the China Surtax order for electric vehicles, steel and aluminum, the United Surtax order, and Surtax order for steel and aluminum. Steel derivatives will be on this list. I predict it will be on there as of July. The only reason it's not on there now is because we are still within the 90 days to self-correct. So if you make an error on an import, wrong classification, your valuation is wrong, you have 90 days to self-correct before CBSA will issue any penalties or interest. So because we're still within the 90 days, they are not on the list of verification priorities. After the 90 days, I'm sure they'll start sending out letters for it, and I predict it will be on the list as of July. It only comes out twice a year, January and July. I predict it will be on the list as of July. And like Max said, CBSA has no leeway when it comes to the surtax. The China surtax order is a perfect example. I had someone bringing in gas-powered wheelbarrows, and the tariff classification happened to be on the list for the China surtax electric vehicles. And even though I pointed out to them that these were not electric vehicles, they were gas-powered wheelbarrows, they were still subject because they fell under that tariff classification. That's why it's important to have it correct. Because with things like that, it would have been $125,000 in surtax for them. And the shipment was definitely not worth that much. So that's why it's always important to have your classifications correct. We were able to fix that with CBSA and get it corrected so they didn't have to pay it. But that doesn't always get caught. Because it was a verification letter and they just basically said it was wrong. Now prove me wrong. And for something like this, if you do get a verification letter, make sure that you have support for whatever it is you're declaring. Your value, commercial invoice, proof of payment, your tariff classification, technical specs, bills of material, that kind of thing. Make sure you have all of that, and whatever you have can match to something else. Customs always looks for linkage. So your PO links to your commercial invoice, which links to your proof of payment, which links to the item. Make sure you've got the linkages and all this information handy. So planning implications. These measures affect everything. Pricing, sourcing, contracts, margins. You should be treating this as a strategic trade issue, not just a customs line item. It would be good to have finance and operations collaborate to come up with, to see how the surtax impacts across product lines and customer segments, and then plan for that. How you're going to absorb costs. Are you going to be increasing prices? Are you going to reduce the type of products you're offering? Are you going to look at alternative sourcing? Although I have to say, with this one, alternative sourcing might not be even applicable because the order does state that it's all countries. It doesn't have a breakout saying not Canada, not US, not Mexico. It's everybody, which includes Canada. Next slide. So importer action checklist. Your first step should be on identifying your exposure. Review the goods that you import. Are those tariff classifications on the backgrounder? Do they fall under that list? Make sure that if you have items that are gray or sort of ambiguous, that you've got them classified correctly. And if you're not sure, then reach out to your broker and say, hey, I need help with this. And I would always, always suggest a ruling with CBSA. They're not quick. It usually takes 3 to 4 months. However, then you have it in writing that this is where this good qualifies. And if they come back in a year to review or 2 years to review, you have that as your supporting document. That is their ruling that this is where these goods should go. If they do decide to change it because new information has come, you don't have to pay on anything going back. It's always paying it forward. So that will cover you for any of the goods that you have. So if anything seems ambiguous, I always recommend getting a ruling, always. Calculate your total surtax liability. You can go back 2 or 3 years to see how much of what you have imported. Once you've determined your tariff classifications are correct, take a look at what you've imported in the past and what you could be importing in the future. And by doing what you've done in the past, you can see what your exposure might be and how much you may end up having to pay. We do impact reports. We run them from the system and put them up against the tariff classifications in the order. And we'll go back to 1 or 2 years, sometimes 3, depending on whether it's a request or not. And we'll list, these are the items that would qualify under the surtax. This is how much surtax you would have paid in the past. If you import the same things, this is what you're going to pay going forward. Okay, sorry, next slide. So as Max said, we actually have a 1-page remission application guide that we will be handing out to you. Normally any mentions of remissions are actually put in the order or in the customs notice, and in this case, it wasn't there. So we were of the opinion that you couldn't apply for a remission, that it wasn't something that you can do. And unlike other remissions, they're not offering anything blanket, as in if you do manufacturing, or if you're doing processing, or if you're emergency services, or if you're a hospital. They're not doing that this time. This time it's strictly per importer, per item, on a case-by-case basis, very specific. There's not going to be any sort of general remission for things. So far, I do that caveat with so far, because the remission for the US surtax, I believe, came out 6 weeks after. So they may still, but as of right now, that's where it is. And I highly recommend applying for remission for your goods. Practical guidance, collect evidence of domestic sourcing. Definitely, that's one of the things they ask for. They want to know how this will affect the Canadian economy, how this affects your business, what's going to happen if it doesn't, if you don't get remission. The 1-page remission application is information that wasn't officially issued by CBSA. The backgrounder does state that you can apply for remission, but doesn't give you a whole lot of information on it. This was information that was done by the CSCB requesting it from CBSA. So it's basically the same as the US surtax. That's the remission process they want to follow. They do add a couple more items, I believe, to the template that they're looking for, but that's basically it. And I believe everyone should apply for remission on everything. I have no problem burying the government in paperwork. Okay, sorry, next slide. So always remember that the surtax is always calculated on the full value for duty. Regardless of the steel content. Like Mac pointed out, the 39.25, that's plastic. It's ridiculous, but they've got it in there. And CBSA has to follow it. They have no way to offer you any leniency themselves. All of this is through Finance Canada. CBSA has been directed to process it this way. That's what they're going to do. Specific remission, like I said, the remission for these is specific. There's no general remission for your industry or for the work you do. It's very specific on a case-by-case basis. And high audit risk. Very high audit risk. I mean, I have received 4 letters in the last month for clients, specifically for verification on Surtax. So that's in the last month. In the last year, since it came out, I believe there was 3 other ones, but in the last month, I've received 4, and that's not normal. That's very high enforcement, and they are going after this to make sure that people are paying the surtax where they're supposed to. They're not going to chase the ones that paid surtax and probably shouldn't, because that's on you. As CBSA would look at it, that's on you as an importer. It's up to you to figure that out and let them know. But when it comes to them thinking you should have paid it, yes, they will be cracking down on everyone very, very aggressively. So compliance is not optional. You need to have this right the first time. You need to get everything in right the first time, because you don't want to have these fees come up later. You don't want to be nailed for duty a year later or 6 months later when you can't recoup that in any way. You need to have these things done in advance, or at the time of release, or before confirming, or at least within the first 90 days. If you get your shipment cleared and then you look at it and say, no, I don't think that's right. Within the first 90 days, you can fix it. There's no penalties, there's no interest, there's no nothing. So we definitely push for monitor your imports, make sure your goods are classified properly, make sure your values are correct and everything is the way it should be. I think that's me, and I hope I was as articulate as I wanted to be.
You certainly were. Thank you, Kirsten. It I think is really helpful. There's a slide that really stands out to me, and when you look at the different stacking possibilities, and when I say stacking, not stacking surtaxes, but stacking of SEMA and GST and how GST is calculated, like I think that's really the meat of this and understanding the application, and ultimately trying to get back to some type of impact report, which is what every leadership team is looking for. You know, where's my risk, and is there anything left from in our margin on this? So I think that's an important way to look at it. The same compliance checklist applies this time as we had last time. Nothing has changed in what we recommend, and I think Kirsten did a wonderful job teeing up how important tariff classification is. Are goods classified right to begin with? That is where you need to start in many cases. You need to compare against the official tariff item list, and you can't really rely on vague category exclusions. From there, it's really getting into, well, origin doesn't hold as much weight. There is, you know, some benefit across free trade agreements with CUSMA, for example, but you know, you don't have as much room with origin as before. But you do need to compare against existing surtax orders and, you know, how something else may apply in advance. So using that logic tree is a very good way to get yourself final. Ultimately, you want to follow the permits and timing around how things have changed. And we covered tariff rate quota in the past webinar. Not a whole lot changed there, so there was an emphasis on that today. But now, you know, we're looking at dates in the rear view mirror that were in front of us in the past where, you know, things will change. So I'd agree wholly with Kirsten that, you know, we will see an emphasis on the trade verification priorities around this specific steel surtax into the future. So take this, you know, time to make sure that you are compliant and build a checklist for yourself to work through with your teams, because it will be a cross-functional effort across the organization. We will give you our resource list, you know, the formal. I think I saw it in the chat here. People asking for where is the list. You know, you can go into Google and just ask for the steel derivative list. Was published December 11th and effective 26th. You can find it there. The list will be there as well. We'll share this deck so everybody has it. Our trade updates. We push these out to you know, over 10,000 clients and non-clients and industry members, and it is a forensic way. We don't mess around with speculation in our trade updates. It is a forensic way to know what has happened on policy change. There is no speculation there. We do run a secondary newsletter called Chapter 49 that is on its own brand, which is much more. It's a bigger version of, there's speculative stuff and more macro of how this impacts and bleeds into ancillary industries like logistics. So if you want a kind of bigger macro look at things, the Chapter 49 newsletter is a good way to look at it. But the trade updates is the forensically correct place to live on what has actually changed. Always use formal resources. Always tie back and make sure that information is sourced back to a customs notice, a background, or something from the Department of Finance or CBSA. You can't lean on social networks to be your only indicator of information. The information that we give you today, it's what we have at this moment in time. It's subject to change. Trade is extremely fluid. We all know this. But, we have to limit ourselves to what has happened up to this moment. And, forbid something happened in the last 41 minutes we've been doing this, but it is, relevant up to this point. Continual education and keeping in touch with a strong network is extremely important to make sure that you're being helped. I closed with, before we went to Q&A last time, and I'll close with the same thing, that you're only as good as the people you surround yourself with. I'm super fortunate to be surrounded with knowledge experts like Kirsten and Rhonda and the whole team at GHY. We couldn't do this without each other and understanding things, and I would recommend the same for you. And if you don't have a network, we'll help you build one. It is super important. We're trying to put on as many educational events as possible to get information out to people that, may not understand it or have it. We're doing in-person events and really just trying to curate an experience of, we're all helpers. And, when I was a little kid and looking back to Mr. Rogers, how do you just be a helper? How do you help people and understand? Because at the end of this journey, there are some difficult decisions that need to be made, and you need a strong network around you to make them. You're only as good as the people with you. So I highly recommend that. That being said, we do have a lot of questions that have come through. I was trying to read them if you saw me looking away, and I guess that's probably why I was screwing up your slides, Kirsten. I'm sorry, but I was trying to read as we were going. There's a couple. I think the first one that popped in was, does this apply to products coming from Europe? Yes, it applies from products coming from Europe. There aren't any exemptions there. It's really based on the tariff list. It does bleed into the next question that I'll pass over to you and read verbatim. Taking the example of the HS code, the plastics 392520, although the measure is described as applying to a steel derivative goods, some of the listed HS codes describe metal goods more generally. Can you confirm that the 25% surtax is determined by the HS code? So if the goods are classified under the listed HS code, the surtax applies even if the goods are made of aluminum rather than steel.
Yes.
So
yeah, that's why I tried to use the gas powered wheelbarrows as an example. Not even anywhere close to being an electric vehicle. And because it's strictly by the tariff classification, that's where CBSA decided they had to be. So 392520, even if it's aluminum instead of steel, if that's where it's classified, it's going to be subject to the surtax.
This one, so if the good is part of the list and it meets the definition of the exemption stated in before July 1st on motor vehicle chassis, that it's not subject, so it's using that as the exclusion. How should this be entered into Canada? Is there a code-based approach similar to how OIC remission is applied when completing, your entry or looking for a CAD? Or is the remission applied through a separate process after everything has been billed and accounted for? So looking to understand, I have a motor vehicle chassis, it is on the list, it is part of the exemption or should be part of the exemption. Am I doing this proactively or reactively when it comes to my entries?
I would recommend proactively. We don't have any OIC numbers. We don't have any exemption codes to use on them. I honestly don't know how we are programming that in the system. I don't know how CBSA has requested it be put in. I'm assuming we're just putting it in as not subject. But that's something that I can definitely take back to one of our release teams and verify with them how they're putting through the goods that are exempt, because we don't have any coding or any OIC remissions to put on against it.
Okay, we'll leave that as a takeaway and follow up as part of the communication. The next is one I can answer. It's the 25% tariff changed in the currency on the invoice submitted from our supplier. So if we pay them in USD at the 25% surcharge, is that in USD? No, the value for duty is always converted into Canadian funds and will always be remitted against the Canadian dollar. So you'll always, you know, when we have something coming in a foreign currency, we convert it into Canadian dollars at the time of entry, and it will be payable against that Canadian amount. Don't know that I understand that one. We will post the link to the steel derivative list. So we're asking, is there an online resource other than the CBSA website to classify items? Is it okay to use AI tools as proof of classification? I think this is probably a little bit out of scope. I think that I'll pass it to you in a second, Kirsten, what you think about, you know, is there reasonable care in AI tools? But I think, you know, there's a variety of different tools. There's everything from large language models through something like GHY Classify that is more traditional and based on conditional logic. So it's a decision tree, if this, then that. And it does get you, and it does show that you've done due diligence and shown some care in the process. But I think, you know, we're asking the long-winded question of is like, how do we get from reasonably right to forensically correct? And that can be a high mountain to climb. And I would argue the only way to be forensically correct is with a customs ruling in many cases. But maybe Kirsten, I'll get your opinion on how the use of AI tools, can it be, you know, used as proof of classification?
AI tools can be good, especially like Max says, getting you to that point where you have a tariff classification. I don't know that they can do forensically accurate on everything. Some things are easy, some things are not. As he said, the best way to do that is to get a customs ruling. If you use AI to classify your goods and CBSA does a review, you can use that to show that you use due diligence to get the tariff classification that you have. But CBSA will not take that as law. They will not use that in their determination because they use the customs tariff, they use explanatory notes, they use rulings, they use CITT decisions, WCO rulings. They'll take those as law and where these things need to fall compared to what an AI has come up with. AI can show that you've done what you need to do to get tariff classification, but I don't know that you'd be able to use it as proof if customs came knocking on your door. A ruling is always the best.
Agreed. Thank you. This question, I won't go into the specifics. It's kind of long, but it's essentially saying, you know, we've got some marble and ceramic knobs that were classified as steel. They're on the list. The knobs themselves aren't steel. The only steel is it's actually threaded brass. But, you know, they're saying, hey, we think this tariff classification is wrong. What will be the proper process to amend past and future? I think the first step, and then I'll pass it to you to address, you know, looking back and forward. But the first step is, you know, confirming that it is in fact wrong, and, you know, probably bending Kirsten's ear for 15 minutes to say, hey, can we take a peek at this to make sure, you know, you don't want to set off any domino effect before. But maybe in the instance that it is wrong, Kirsten, what would you recommend from looking back and forward strategy to changing classifications?
If the tariff classification is wrong, then I would go back at least 90 days because you're still in the 90-day reason to believe correction area. And then going forward, So at least 90 days going back. It sort of depends. CBSA is good with, okay, you've done your due diligence, you've done this, and this is where it should be classified. That's your reason to believe date. So going from there, you would go forward. However, if duty is payable, not the surtax, but regular duty is payable on the good, they at least want you to go back 90 days. In a review a couple years from now, they might say they want you to go back further, but for 90 days for sure, going back, doing it retroactive 90 days and then going forward.
Perfect. There is a note here about some invoice inconsistencies. I did drop a note to just send me an email. I think, there's a lot of different ways that we could address that question. Whether it was a changing tariff classification, like if something was, changed on the documents themselves. There's more to this question that we need context to, but I'd be happy if you want to reach out to me directly to involve our client care manager, and we can definitely get to the bottom of what's happening there. This question is as a wholesaler rather than a manufacturer, do we have an opportunity for remission of the steel derivative surtax? My understanding would be, as the importer of record is really the definition that you need to be looking at rather than wholesaler versus manufacturer. Do you have anything to add there, Kirsten?
I would agree. I always say apply for remission. The worst they can do is say no. And you're not anywhere, you're not further behind than you are now. And if they say yes, then you're further ahead. They won't penalize you for requesting it. So
no, and I think it is important to sit down with someone like yourself or Rhonda and say, hey, like, playing devil's advocate, like, why wouldn't I? Or where are the gaps that I'm not there or considering? Like, really kind of do a working case on, they say the best negotiators know the other side better than their own. Well, what's the devil's advocate argument to why someone wouldn't, and really reverse engineer your business case and remission application to make sure that you've addressed all those gaps. So we will be following up and as a thank you to this with the a really easy to use one pager on, hey, here are the logical steps to get your remission application approved. Does it mean you will get approved? Maybe not, but at least we'll give you the steps to get through to feel like you're in the right place. So we will be sharing that for sure. Does CUSMA eligibility relieve goods from the surtax on derivatives?
No, CUSMA, none of the free trade agreements relieve it. And there isn't even an exception for US or Mexican goods. The order literally says all countries, which means that Canada's included in there too. So if you have goods that that are Canadian made that fall under the tariff that you ship to the US for galvanizing or coating or some other further processing and bring them back, even though the origin is Canada, you're still going to be paying surtax on them. We actually sent a note through the CSCB, Canadian Society of Customs Brokers, to reach out to CBSA to get clarification on that, because we find that really odd that Canada wasn't exempted from it. So we don't have an answer yet, but when we do, we'll make sure that it goes out in our trade updates.
Thank you. Just scanning the questions that keep coming in. There's a couple that unfortunately I need a little bit more context to even float them. And this one is an interesting one. I don't know the answer to and how this applies. I think you can use the ruling as a guiding light, but if we have a CBSA ruling from a vendor, can we apply that to similar like goods from other vendors that are directly imported?
You can use it as a starting point. If they're identical goods that you're getting in from different vendors, then I don't think CBSA is going to argue with it. Legally, a ruling can only be used by the person who applied for it. So technically, a ruling from your vendor, it's only valid for them. That's one thing that CBSA cannot change. So if you use it as proof for why you classified the other vendor's goods in the same place, That would be good for CBSA. It's not going to stop them from changing it. It's not going to stop them from making you go back and having to fix them if they do an audit on you for those specific items. For the vendor with the ruling, you won't have to, but for the rest of them, you probably will. But it is a good place to start, and it's usually means that your goods are classified accurately. So there shouldn't be anything wrong with them. It's only if CBSA decides to change the tariff classification on the goods. That makes
Thank you.
sense.
Yeah, makes sense. Don't know that we're going to get through all of these, but we will be intentional on following up here. I'm just trying to go in order of that they came in. I see we're a Canadian warehouse distributor for our head office in Germany, all parts made in Europe. The parts that flag for us are screws, spare parts, which are made to European standards. Do we have to search Ontario to ensure no company in Ontario can produce these? I assume that's in conjunction with trying to get a remission application in the works.
Yeah, really what they're trying to do is make sure that you're not sourcing these goods offshore because it's cheaper than trying to buy it from a Canadian company. So if there are Canadian companies, and it doesn't necessarily have to be just Ontario, it can be, anywhere in Canada. If there are other companies that are manufacturing these goods and the prices are comparable to what it would cost to bring it off from offshore, within reason. Obviously, the Canadian one will probably be a little more expensive. Otherwise, you would have bought it from them in the first place. So in that case, they'll want to know why you're not purchasing it from them. Maybe the tooling for it is in England, and it's going to cost you way too much money to have that tooling brought over to Canada, sent to a specific production center, and have it start up there. It's not going to be feasible cost-wise for you to do that. So in that case, well, then request a remission, because while there are places in Canada that might be able to make it, it's cost prohibitive for you to be bringing all of that back to the country to have it done. They might say no as well, but that's the kind of thing that you can put up for it. They really want to know that you've done your due diligence to say, okay, I can't buy from these people because of the cost, or because of this, or because they don't make it. They just don't want you to say, yeah, well, I bring it in from offshore, and that's it. That's why I deserve remission.
Thank you. There's a couple themes here around duty drawback. So could you clarify whether surtax paid on imported goods can be claimed in a duty drawback when the goods are exported? So how drawback will impact surtax?
That happens to be my specialty. Yeah, surtax can be claimed back on a drawback. None of the surtaxes, even the US one, fall under the lesser than rule under CUSMA. So you don't have to worry about whether the goods qualify for CUSMA or not, going back and forth in between the countries. Surtax is claimable, and it's 100%. If you bring in $3,500 worth of stuff and all of it has been assessed surtax, and you export all $3,500, you get all of that surtax back.
Thank you. That's the very valuable information. I'll address the final one around the back-ordered items. Like, unfortunately, if they didn't show up within the timelines, they are going to be applicable to wherever the date of import is. If they're not in transit by certain dates, like I think we'd see a wave of people saying, "Well, I ordered this way back when, and it was back ordered." I think it's going to be a difficult case there to get through on remission, especially if it is a engineered steel building being on the list. So don't know if there's anything more to add there, but we are coming up to time now. So I will just thank everyone for joining us today and let you know that we will reply back individually to all the questions that we didn't get a chance to answer. Some of them we may ask for a little additional context. At the end of this presentation and in their follow-up email, you will get Kirsten and my contact details. Please feel free to reach out to either of us for any more information. We'll look to continue doing these into the future as we get more information and, possibly just stand one up solely focused on remission applications and how we can help. So thank you very much, Kirsten. Appreciate your time today, your knowledge, and thank you everyone for joining. Hope you have a wonderful week.